So Uipath surged on Friday after earnings, making Cathie Wood a happy investor. Why? Well, she owns roughly 47 million shares worth 1.19 billion, which is a significant portion of her entire portfolio. And not only of her portfolio, but it also represents um, roughly 11% of all outstanding Uipath shares. All right, so let's get into the article and then we'll look at the analysis. So why Uipath stock soared 20% this week? Let's get into it. Uipath stock has steadily climbed around 10% to start this week, leading up to its earnings released late Thursday, but shares roared higher in after hours trading today. This is Friday, as the company announced third quarter revenue grew 24% year over year to 326 million, translating to adjusted earnings of 69 million or 12 cents per share. Analysts on average were only expecting earnings of 7 cents per share on revenue of 315 million. So they beat the estimates for revenue about 10 million and then revenue earnings per share of roughly 5 cents. So Uipath also saw a healthy 24% increase in annual recurring revenue to 1.4 billion exiting the quarter. Its dollar-based net retention rate remained steady at 121% as well, meaning existing customers spent on average 21% more on Uipath solutions after their first year, which is great to see. Here's what the CEO had to say. In our most recent platform release, we delivered scores of new capabilities that seamlessly translate the potential of AI into tangible actions, accelerate productivity, spark innovations, and drive business outcomes for our consumers. All right, so let's look ahead at the subsequent quarter. Look into the current fiscal Q4. Uipath issued guidance for revenue of 381 million to 386 million, up 24% year over year, and roughly in line with analysts' expectations. Uipath also called for ARR to increase to a range of 1.45 billion to 1.455 billion by the end of the fiscal year. So current results, forward guidance looks great, and so if we scroll out to the weekly chart, that is the reason why this past week's candle closed above the resistance band at $22. However, the best levels to have gotten long was months ago down at the weekly bias level at $13.50. Question is, where does price go from here? Well, if I look at current price and I look to the left and I go up, I see rejection wicks, I see a pivot low, and so that is the next target. That's going to be the $32 level, which is roughly $7 above the current price. Now, what I would like to do is look at this area a bit more on the daily chart. Again, there are no levels of sellers in this extended range red candle until you get up to about $29. So again, let's scroll down to the daily chart. We have a gap. Look at that. All right, so easily we can get to $29. That's about $4 higher. So let's put a little indicator here, right? What do gaps signify? A huge imbalance between where price gapped, right? And again, as we saw in the weekly chart, this was just a red extended range candle, meaning there are no sellers between price and where the gap would fill. Now, I believe price is overextended, and so what I'm expecting is a pullback to what was the resistance band at $22, which should become support now, and then the next leg higher. Again, first target is going to be this $29. That is the gap fill, but ultimately I think price can get to $32 going into next year. Thanks for watching. Subscribe. Please like the video.